And so that's where we're trying to create products where we can help folks that want to get into the game in smaller increments and get started with farmland, be able to make that happen.
Thank you, everybody, for tuning in to today's Land and Everything Else podcast. I'm with my buddy, Dave Muth from People's Company. Dave, thank you so much for being with us today.
Hey, great to join you. Looking forward to the conversation.
So, Dave, I wanted to jump in a little bit about, People's Company, what you do, and then from there kind of get into capital markets and how land helps shape that, and maybe talk a little bit about equities in that mix too.
You bet, you bet. So People's Company is a sort of full service national scale farmland transaction firm. And what that really means is we've got offices in all the major ag regions in the country. And then we have services that move down the list from brokerage and auctions, about $1 billion a year in transaction volume. Our appraisal group is one of maybe the largest ag appraisal group in the country. Really important business because it's competitive intelligence. It lets us know what's going on in the marketplace across different crops and regions. Our land management platform is managing farms in 24 different states now, touching a lot of different kinds of crops, a lot of different sort of regional dynamics. We also have an energy management business that does traditional oil and gas, as well as a real focus on this emerging renewables space. And there's a bit of a land rush, particularly in certain regions where incentives are quite strong at the state level for developers to get land locked up. And it's a little chaotic. We think that landowners could use some help in understanding and negotiating contracts to their benefit. We work in crop insurance a little bit, not trying to build a big agency, but it's so fundamental to farmland performance that we want to make sure that we're understanding what's happening there. And then I spend the majority of my time working in our capital markets group. And the high level perspective on what we're doing in capital markets is trying to connect capital that would like access to farmland with the farmland deals that meet their parameters. And this can range across a lot of different kinds of capital, institutional investors that could use some help, family offices in a separate account, direct ownership kind of model, wealth managers that would like custom offerings to bring to their clients. We'll also work in tax advantaged kinds of portfolio makeups like Delaware statutory trusts. So we can work across the spectrum in terms of being able to connect capital with farmland assets. And the real key for the organization is the boots on the ground, right? We've got, it's still a kitchen table business largely, highly fragmented ownership across particularly certain parts of the country like the Corn Belt and the Plains. And we need to have people integrated into these local communities in order to really be able to understand what's happening with the market and find deals.
So I want to explore capital markets with you, as that's your area, and I'd love to kind of get some perspective, and I'd like to view it from the standpoint of maybe size of player, if we could have that conversation a little bit. When a pension fund comes to you or a state or something, big, how is that conversation maybe different than a family office? Or is it the same? I'd love to get your perspectives on all that.
Yeah, absolutely. I think there's elements of the conversation that's pretty similar, right? So we need to kind of understand what are your expectations from your farmland investment portfolio. And we've got to think about returns and the two components of farmland return, of course, being that cash yield, annual cash yield, and then that long-term appreciation. Where do you need those return dynamics to land in order to hit your targets? And that's a sorting function that can be really helpful pretty early on in any farmland conversation. And that's probably an area we can dig into a little bit deeper, certainly as we go through the conversation. And then from there, there's also certainly an element of what's your deployment look like? What's the scale of deployment that you want? And then what kind of timeline are you looking for? Because the reality is that there's always more capital looking for farmland than there is farmland available.
Right. I mean, from that standpoint, this is where, in my opinion, land starts to vary wildly from securities, right? Because an issuer can issue a second round of stock or a second round of bond. We just saw, with a meme stock, GameStop, they were like, "Hey, let's issue more securities." The price went up a lot, right? But you
Yeah.
can't issue more farmland, and I think to me that's where you start to see this like divergence happen in the world. Is there's a finite amount of this stuff.
Yeah, supply is going to be eternally constrained in this context. And, generally speaking, we think about something between 1% and 2% of farmland will turn over on an annual basis. And it's a $4 trillion asset class roughly now, right? So that starts to constrain the capital that can get engaged. And that's going to vary on where the market's at. And I'll do a really quick aside on you. Farmland has had a pretty strong run
Sure.
over the past few years as we've hit this inflationary cycle. We've seen some incredible growth in farmland values, particularly through the plains and some parts of the Midwest, 40, 50, 60% over that 3-year span. And the interesting dynamic is that high prices in farmland will bring more assets to the market, and so
Okay.
a lot of investors will actually look at that as a positive thing. Now I can get access to high quality farmland that probably would have never hit the market without those high price dynamics. Now, you also have to be prepared to pay those high prices, which can be constrained around those annual cash yields that you might be looking for. So within that dynamic of a 1 to 2% turnover, what complicates it that much further when you're thinking about investors is you go to certain regions, it's north of 50% of that land is going to be bought by owner operators. So other farmers are going to be your highest paying buyer on a lot of that farmland. And so that constrains the supply even that much more. And it's a real challenge for folks that have very stringent constraints around returns, appraisals, price points that they can get into it, and they're looking to deploy a lot of capital quickly.
So if I am an insurance company guarantee fund and I'm looking at, trying to place, let's say half a billion or something, that may be trickier than a family office play, or is it all just kind of a matter of perspective?
Yes, it absolutely is. And what we tend to see when we have a lot of those conversations is they're just looking for very, very large deals, right? They want to move quickly, and the number of large deals is a very small subset. When you start thinking about 30 million plus, maybe is a metric that will have some folks say, "Hey, I can't actually spin up my machine to do an acquisition and go through the diligence process and all of the requisite elements of an acquisition pipeline unless it's 30 million." Well, we just don't see that many of those, right? We actually see a lot of deals in, let's call it the $2 to $8 million range. And we'll talk to folks, a lot, of course, being relative to the broader conversation. We'll talk to folks around, hey, we can get you to 30 million faster in many cases if you'll let us aggregate smaller deals where we view the deal risk and the cost of acquisition as being fairly low more quickly than what we can actually drum up the right $30 million deal in a lot of cases. That's not always the case, but it's certainly a consideration in the mix. And that's a distinguishing factor with a lot of the family offices in that type of capital versus large institutional folks that you're referencing.
Well, and I think, to our audience that probably is, fantastic news to know, that space and dollar amounts that play in and kind of how that world works from the standpoint of when you look at somebody buying land or adding to a capital position. Do we try to diversify, or can you talk to me a little bit about that diversification in that space?
Yeah, so it absolutely comes back a little bit to their goal structure. It comes back a little bit to what kind of management complexity are they willing to take on, and then the associated risk. So we'll often talk to folks around farmland in a pyramid kind of fashion and thinking about building out a portfolio. And if you go to sort of the Midwest and even the Plains areas, sort of core commodity production, that performance is incredibly predictable, right? You're going to be somewhere, depending on exactly where you land in that 2% to 3.5% annual return. And then your appreciation is going to be somewhere between about 5.5 and 7% when you're looking at 10-year windows, right? It's very, very predictable. There's zero vacancy on high quality farmland in those areas. The crop insurance program, which is covering 95% plus of those acres, is going to guarantee annual revenue, which subsequently creates a lot of stability in that income coming back to the land ownership. But that coupon, that cash yield is pretty lean, right? So we'll talk to folks around getting that portfolio started with that kind of workhorse set of assets that are just creating really consistent annual revenue. And we can structure our arrangements with tenants or farmer partners to capture some commodity upside when those cycles come around and revenues are a little bit higher, and sort of share in that, create a little bit of a windfall. And then when you start moving into higher risk and higher complexity kinds of assets, so thinking about fresh markets, individual supply chains that you're connecting to, or even permanent crops in the tree nut or tree fruit space. Now you're moving further into, a lot of times the landowner is actually going to be responsible for financing the operations, right? That adds an element of risk.
Sure.
Crop insurance doesn't necessarily guarantee return. We're not sitting back clipping that coupon. We have working capital at risk. And those cycles, we're in a cycle right now, I think in, call it, in the almond and pistachio space, it's been a tough 5 years. A lot of red ink for a lot of orchard owners, a lot of institutional folks there, and it's just the price dynamics. We're probably starting to come out of that cycle a little bit, and then there's likely going to be a bit of a windfall cycle where those returns are really high. So that's a little bit of the conversation for folks is what's your appetite for risk and return, and having to actually put capital on an annual basis into your portfolio to continue operations. And that kind of structuring, once we get those answers sorted out with them, we can come up with a plan that's pretty clean.
Well, that's fantastic. We, so often get into asset allocation conversations, and generally they tend to focus in on stocks and bonds, quite frankly, maybe an annuity. So having that farmland allocation and different types and different, looking at appreciation income and additional capital you'd have to put in, I think that's really important to understand in that space. I've got another question, and I don't really know the answer at all to it, so I'm throwing it out in the wind. But what if you're younger and you say, this is an asset class I'm excited about, I want to get into? How do you start?
Yeah, so that's one of the real challenges, right? It's an
Yeah,
incredibly difficult asset class to get into, and you know the wealth advisor space better than anybody, but we've looked up the specs on this, right? There's 15,000 plus SEC registered investment advisors, and it's 114 trillion or something in that range in assets under management. And that group of folks that are really servicing a lot of young people starting to build wealth generation portfolios have pretty limited access to farmland, right? So you've got a couple of REITs, you've got Gladstone, and you've got Farmland Partners. What you're doing there is you're actually working, you're taking an asset class that's non-correlated with public markets and sort of wrapping it up in a public market. So there's always a little bit of an interesting dynamic with the
sure.
REITs in farmland and how those values will work over time.
Yeah.
Direct ownership is hard, right? There are some funds that are out there that you can get in as on a commingled basis. So you'll put your capital into a fund. A lot of those farmland funds, the entry point might be a little bit high for
Yeah.
somebody first getting started. And so direct ownership requires a lot of knowledge, right? How do you actually find a deal? Certainly you can go out and look at public listings, but now I have to negotiate it. I have to understand if I'm getting the right price. I have to understand how to structure leases. And so that's where we're trying to create products where we can help folks that want to get into the game in smaller increments and get started with farmland, be able to make that happen. And that could be through their wealth advisor. And we're certainly seeing some fractional ownership platforms emerge with AcreTrader and Farm Together as examples where folks can get in at, let's call it 25 or $50,000 increments and get partial ownership in farmland. The key is with farmland, if you want to start early, figure out how you're going to get into it, find the right product, but just be in it and stay in it for a long term, for the
Yes.
long term, because that performance is really, really consistent.
Well, and I think to me that's where farmland is such a important asset class institutionally. When you start looking at everything from the defined benefit space to the private wealth space to the family office space to even institutional spaces, because here's an asset, it's not valued every half second. You're not going to be able to see it go up and down. You don't have that consistency, that volatility. You're looking at a long term performance vehicle that helps smooth some of that risk and volatility you might see in other elements of a portfolio.
Yeah, there's no ticker for farmland. In the long-term thesis is pretty clean, right? So
Yeah.
we like to look at yield curves, right? So how much are we producing off of our land? And corn is this beautiful dynamic where if we look at what's happened, corn yield at a local level or at a national level, no matter how you actually slice that and look at the data, we're at 2+ bushels per acre per year in gain. That's producing more with less. And
Yes.
that trend is going to continue for an extended period of time, right?
Sure.
We've got absolute stability and revenue from our federal crop insurance program. You've got really good fundamentals that you've probably talked about relative to global diets, right? And the increasing quality of the diets that creates more calorie needs from land to feed through animals as median incomes rise in certain high populated countries. That thesis is great. The biofuels, renewable fuels thesis is also really good in terms of creating additional markets. And then the one that we're incredibly excited about that is very much out there and just materializing is non-ag revenue. We're talking about renewable energy infrastructure, think wind and solar, right? The battery storage, the transmission, everything that comes with the carbon storage within our soils. These are really, really massive revenue streams that fundamentally required this same constrained land resource in order to fulfill, right? And so this story, we see the long-term dynamics with the farmland and the scarcity of it as being incredibly strong.
Oh, I couldn't agree more. You know, I think the entire, just starting with that initial thesis, and I know, you know, Dr. Bruce Sherrick does it justice, but that initial thesis of this idea that we're going to need to produce more per acre to feed everybody and then to feed the animals that feed everybody, that stands alone, much less the other elements you've thrown into that puzzle. You know, I can't tell you enough that over long term periods, you know, when we look at farmland, it's an incredible investment, especially with a big diversified portfolio of other things. So I guess I'd like to kind of close with a couple of questions for you. The first question would be, a lot of our audience are investment advisors, insurance agents, registered reps, those financial intermediaries that work with family wealth. They want to learn more about investing in farmland. Maybe they've got clients who are interested in investing. What should they do? How can they learn more?
Yeah, so in terms of broadly looking at what farmland is as an investment grade asset class, you mentioned Dr. Sherrick there at University of Illinois. He is probably the best published and the best data producer around the asset class. I'd encourage folks to go get that fundamental academically rich data, look at Bruce's products. Dr. Sherrick's products there at the University of Illinois. We also would encourage folks to come to our People's Company website. We've got an industry research page. We try and create really timely sort of pieces helping folks understand exactly what's going on in the market. We produce an annual land values report, which we collaborate with Dr. Sherrick. That comes out every fall, where we're digging into what's happening with land values and land markets and what are the financial dynamics and economic dynamics region by region through that report. And then I would also encourage folks to reach out to us directly, and we'd love to talk about how we're structuring these products, right? So if they believe that they have a certain block of their folks with capital ready to go, we have the ability to structure offerings and create the outcomes they're looking for. If they're considering maybe getting an offering put together so that they can present it to their folks, whether they want some tax advantaged outcomes with it or if they just want some exposure to the asset class. That's a conversation that we'd love to have too. We've got product offerings that can work in that arena as well.
And my last question for you is one, and I'll share my perspective too. I've been to a lot of financial advisor conferences in my day. I've been to what used to be TD's conference and Charles Schwab's incredible conference and BNY Mellon, and they've been so gracious, and all these financial planning, FPA, and other types of conferences that we go to. But they all focus on this kind of preset idea that the world of investments is equities and mutual funds and basically fixed income through mutual funds and then some insurance products. And I think the first time I went to the Land Expo, it was really eye-opening as an academic professional. And I'm not trying to solicit the Land Expo here. What I'm trying to get into is, that was a day where suddenly you kind of get this idea of like, oh, there's more out there than mutual funds and stocks and bonds, right? And the whole idea of this podcast name kind of came from that, right? This land and everything else idea. But can you share a little bit from your perspective? The Land Expo is a conference and event. It's one day. I'd love to get your thoughts.
Yeah, the Land Expo has really turned into, in my opinion, the premier farmland focused event in the country. And we get this incredible mix of uh, attendees and participants and speakers that range from local farmers who are interested in just learning about geopolitical outcomes, basic economic outcomes that are impacting their business and their asset, all the way through to some of the largest institutional landowners on the planet. And that mix, creating that networking, and then subsequently bringing in that set of speakers that can speak to the issues that are most interesting at that particular point in time. And there's obviously some carryover year to year. There's folks that talk about global geopolitics that are kind of interesting always, right, to help
Right.
understand what's going on. But then there's things there's conversations around interest rates and cost of capital that have been particularly sensitive over the past year or two. That's really what makes the event move is that network of different attendees and speakers that cover the asset class from all of their different perspectives. That's really enjoyable. And I think it's pretty unique in that context. We certainly go to a lot of farmland based events just relative to our going concern business. And they tend to be pretty focused on segments. And it's getting that cross pollination and that networking that is truly powerful, I think.
And I can't say enough that from an investment advisor, an RIA standpoint, and an insurance agent standpoint, I truly believe if you work with rural and ag clients, or if you'd like to, and you want to learn more about this asset class, I think there's a huge argument to be made for that financial intermediary space. I think the Land Expo makes a lot of sense for people that work in those spaces.
Yeah, absolutely. And honestly, it's really helpful to learn more, right? From folks like that sort of class of folks. What are their clients saying? How would they like to get into it? What are their needs in terms of packaging the asset as an investment? What are the sensitivities? And when we start to look at getting farmland exposed to more and more of these capital sources, particularly that wealth manager space, we're in some senses we're building new business models, right? You talked a little bit about trading equities and that list of products that you see folks talk through and try and understand what's going to happen. Those business models and the costs and the fees and how all of that is structured, bringing that to the clients, it's really well defined, right? There's some
Yes,
competitive advantages across that sector.
sure.
There's a lot of unknowns in how you really actually institutionalize farmland for that group of folks and how that fits into their current business models and how they interact with their clients. These are all conversations that an event like the expo can really start to help folks have.
And yeah, I kind of wanted to end on that because I'm a true believer that, you know, if you've got clients that are holding land, if you've got clients interested, it's one day, it's the place to be. And we'll definitely put, you know, where and how to get there in our show notes. And Dave, I wanted to thank you so much for your perspectives today on land and capital markets. I think this is very eye-opening for our podcast, and we really appreciate having you.
Hey, thank you very much. Great conversation. Thanks much.